opinion on a range of stocks. Let's move over to earnings analysis. Havells' first quarter earnings beat street estimates. There was almost no ad spends, and that boosted EBITDA, and a higher EBITDA in turn led to, of course, higher profit after tax. There are some concerns on higher debt, of course. Anil Rai Gupta, Chairman Managing Director, joins in. Good morning, Mr. Gupta. Thank you very much indeed for joining us. First, if you can tell us, how's business in July? Is it an improvement over June, and in which areas? As well, production, is that better than in June?
Well, thank you very much. Yes, the production is better in July as compared to June due to the availability of labor now. So the plants are now running at full capacity. The demand is a bit intermittent because of the intermittent lockdowns in certain states. So we are seeing a sustained demand, but it is hampered a little bit by intermittent lockdowns. But otherwise, generally, the underlying demand seems to be okay in the month of July as well.
Okay. Well, Mr. Gupta, we have more questions, of course, on demand and supply, but I wanted to clarify about this first loss that you are bearing when banks finance your channel partners. Can you explain what that might mean in terms of a contingent liability?
No, this is not related to this transaction. So this is a completely independent transaction, and the channel financing in Havells is completely non-recourse.
So what is the quantum of that channel financing in the independent transaction as well? Just trying to understand if the promoter companies are funding any of the dealers?
No, we don't.
Okay, so you're clarifying that the promoter companies have not funded any dealers or done no channel financing at the moment.
So investors in the listed company need not worry about this first clause guarantee that's being given?
Well, as I said, the transactions are completely independent. Okay. So the channel financing in Havells India Limited is a non-recourse facility.
Okay.
And how much is that? As of FY20, what is the channel financing in the listed entity?
I do not have the numbers right now, but they are all available in the annual reports.
Okay.
Okay. All right. So can you tell us what is happening in terms of the trade payables and receivables as well? In Q1, the receivables are around 280 crores. Is there any kind of balance sheet stress that the company is facing right now?
Well, actually, the company is sitting on about 1,800 crores of cash. So there is no balance sheet stress. In fact, we are one of the very few companies who've had good collections from all the channels. We've paid all the vendors in time, and that can be viewed from the fact that our trade payables have gone down from 1,400 crores to 700 crores. So we have not delayed any payments to the vendors. We have all paid in time. No, there is nothing overdue. So there is no stress on the balance sheet as of now.
Okay. Will you be reducing debt then, since you have a lot of cash?
Yeah, generally speaking, it was a decision at the time in March that, when the uncertainty was there, to shore up the balance sheet in case of any eventuality, or, it's a sort of a contingency preparation.
Okay.
And as time goes by, we shall be reducing the debt levels. We've never had debt in the balance sheet at all.
Okay.
So, company throws enough cash for our capex plan.
Okay. Did you have to seek moratorium then?
I'm sorry?
Did you seek moratorium from your lenders, from the banks?
Not at all.
No. Okay. Well, now if I can come to the production-related issue, the reduction of imports from China. It was widely expected that you would be a big beneficiary. Has anything fructified? Do you actually see less competition from cheaper imports?
Well, as you know, that we've always been focused on the production in India in our own factories, and that is a long-term strategic decision. So you can't really base it on a month's demand. The sales and the demand is actually out there in the numbers. We definitely believe that we've gained some market share. It's too early to say whether it is due to the supply chain disruption in the unorganized sector or the competition or the Chinese imports, but we have certainly gained some market share.
So in terms of demand, can you break it up for us between switch gears, cables, lighting and electrical durables? Where do you see maximum demand or green shoots at the moment, and what kind of growth are you forecasting?
Well, it's again too early to forecast any kind of growth, but what I can say is that within all these four categories that we have a consumer play and a industrial and B2G play. So within switchgears, also within lighting, also within cables and wires also. And we've seen that the 70% of the consumer part has shown better traction as compared to the industrial part. And it is understandable also because the industrial demand will be slow because, new sites or new capex plans will take some time to come back. But the consumer sentiment has been intact, and there we've seen much better traction as compared to the industrial.
Okay, I just had to come back to one point on the balance sheet issue. During the quarter, your operating cash flow was negative 220 crores because of your higher working capital. I understand it's now at 48 days versus 26 days, same time last year. Do you think that there is going to be further working capital stress, at least until there is demand revival?
As long as there is demand revival and the production continues to happen, there will be, much better numbers in the coming months because, this is a one-off thing where we, as I said, we could have decided to delay our payments to the vendors, which most of the companies have. We decided not to, and we paid all the vendors in time.
Okay.
So, and with the production happening less, so we've not been able to shore up back the trade payables, and this will get normalized over a period of time, which is in the next few months only.
Is it any better in July versus June?
As I said, the production in July is almost at full capacity as compared to June. Okay. So this will definitely start getting better.
What about Lloyd's? What growth do you forecast for the remainder of the year?
Again, as I said, the situation is so uncertain. It's no point in, giving any growth forecast numbers. Lloyd itself has, seen a very positive trend since October, November last year. And, we had a great Jan, Feb, March, April, which are the biggest months for Lloyd, definitely went down in the lockdown. But even after the starting of the sales in May and June, we have achieved growth over last year. So it's a good outcome for Lloyd, especially after the production started in India.
Can you give us some color on the nature of demand? I mean, is the consumer down trading? Are people preferring more expensive or less expensive products? And regional color as well, urban, rural, tier 1, tier 2, tier 3?
So, first of all, May and June has seen good demand from the tier 2, tier 3 towns and the rural towns. The urban towns still are, many of them are partial lockdowns and also they are taking more time to come up. Within the consumer sentiment, I would actually argue that the consumers are in some way or the other trying to uptrend or upgrade their purchases. Because, most of the people have spent a lot of time at home. They want to buy the right products. So it's, we've not seen any down trading at all.
Oh, okay. And do you import components from China? Is there any disruption that you may fear?
Well, we have our risk mitigation plans for any imports from China. We do import components from China. And we have good relations. We have enough stocks also which should carry for the next few months. But in the meantime, we are preparing ourselves to be not dependent on one source, but have alternative plans.
Okay. I just want to clarify this issue. So you're saying that the promoters of Havells have given the first loss guarantee to banks, but that has nothing to do with the listed entity. Is that correct?
That's true.
Okay, because there is some bit of uncertainty that the street is definitely going with because of this whole issue. So any more clarification that you want to give on that?
No, I think it is very clear in our annual reports. As I said, Havells India Limited does not have any given any first loss guarantee to the banks at all.
Right, we'll leave it at that. Thank you very much. It was a pleasure having you with us and giving us more color on your results. Thank you, Mr. Gupta. Okay, we are going from one set of results to another. It was a good set of earnings from India Cements as well. Margins have beaten estimates. Mr. N. Srinivasan, Managing Director, India Cements, joins us now. Good morning, Mr. Srinivasan. Thank you.